Good day. Today I'll be sharing with you Barbados' economic outturn for the first quarter of 2012. The Barbados economy remains stable, and we may be witnessing the beginnings of a slow recovery, but there is some distance further to the resumption of sustained economic growth. The economy recorded a balance of external receipts and payments in the first quarter of the year, and the central bank's foreign exchange reserves increased by $3.8 million. Real output increased by an estimated 1.5%, stimulated in part by a 2.4% growth in tourist arrivals. The fiscal deficit was reduced from 9.1% of GDP in fiscal 2010-11 to an estimated 5.4% in the fiscal year ended last month. This outturn is on target with the government's medium-term fiscal strategy, which aims to reduce the ratio of government debt to GDP from fiscal year 2013-14 onwards. The rate of unemployment averaged 11.2% for 2011, and the inflation rate for 2011 was 9.4%, driven mainly by rising oil and food prices. Real value added in the tourism sector is estimated to have risen by 5% in the first quarter, a combination of the increase in arrivals and an increase in the average length of stay. The pace of recovery in arrivals has slowed, with the Canadian and CARICOM markets performing above 2011 levels, while the UK and US markets softened. The average length of stay for the first quarter increased from 4.7 days in 2011 to 5.2 days this year. In the international business and financial services sector, there was an 11% increase over last year in licenses renewed up to February, but new licenses granted were 37% fewer than those issued during the same period in 2011. Net long-term capital inflows for the private sector were sufficient to cover external debt service, including $37 million in amortization and $50 million in interest payments on foreign bonds and loans from international institutions. The current account of the balance of payments continues to be adversely affected by persistent increases in the prices of oil and commodities, and the deficit for the first quarter is estimated at 3.8% of GDP. In the fiscal year just ended, government's revenues, expenditures, and the fiscal balance were on target with the medium-term fiscal adjustment strategy. The MTFS is government's published strategy to reduce the ratio of government debt to GDP over time, starting with a large contraction in the fiscal deficit for the last fiscal year. The estimates of expenditure for the fiscal year, which began this month, are designed to further reduce the deficit to 4.4% of GDP, with additional declines in future years until the budget is balanced in fiscal year 2016-17. The fiscal deficits which are projected under the MTFS will be financed mainly by surpluses of pension funds, insurance companies, and other domestic investors at market interest rates which vary according to the maturity of the security. Foreign financing contributions will be mainly from international institutions, and the cost of servicing foreign debt will remain below 10% of foreign earnings for the remainder of this decade. The interest cost of government debt is projected to decline from 21% to 19% of revenue by the end of the MTFS period. The ratio of the gross government debt owed to the private sector to GDP is 74%, recalculated according to international guidelines published by the IMF last year. Over time, as the government implements the MTFS, this ratio and that of the external debt to GDP, which is 29%, are expected to decline from fiscal year 2013-14 onwards. The declining ratios of debt to GDP indicate that the fiscal strategy is sustainable, and there is little risk of insolvency of the government or the country in the foreseeable future, based on the IMF's debt sustainability analysis. The first issue of the Central Bank's Financial Stability Report, published online in January, revealed a system that is stable, well capitalized, liquid, and profitable, even though there was some deterioration of credit quality in 2010. Stress tests revealed no systemic weaknesses among commercial banks, insurance companies, large credit unions, or other entities large enough to pose potential risks to the financial system as a whole. There was also no systemic risk exposure from financial linkages to the rest of the Caribbean, Canada, and elsewhere. The resolution of the failed insurance company CLICO has no implications for the stability of the financial system as a whole. Our growth prospects. The economy is expected to grow by a little less than 1% in 2012, with the major contribution coming from tourism and construction, much of it tourist-related. In addition, several low to medium income housing initiatives are being undertaken by government. The current account deficit is expected to widen slightly, based on a projection of higher oil prices. Foreign direct investment in tourism-related projects is expected to be higher this year, with inflows for major projects such as the Four Seasons Resort, the Merrick's Resort, and Port Ferdinand. While some losses are expected, foreign reserves are expected to remain at levels that are adequate. The central bank and the fiscal authorities monitor the external accounts on a daily basis with a view to timely fiscal and monetary action to protect the foreign exchange reserves as necessary. In the medium term of 3 to 5 years, investment already underway in tourism-related projects creates additional capacity in the remunerative high end of the market as a basis for renewed growth. The tourism product is being further diversified with the development of new markets and ancillary services, including initiatives to capitalize on the designation in 2011 of Bridgetown and its garrison as a UNESCO World Heritage Site. In addition, new strategies are being initiated to enhance Barbados's competitive advantage in the international business and financial services sector, to improve service quality, and to take full advantage of the country's leadership in the negotiation of double taxation agreements. Government is promoting greater use of alternative energy, and incentives for commercial and household use of alternative energy sources are being strengthened with assistance from the Inter-American Development Bank. A strategy for the renewal of agriculture and agro-industry is being developed. On the basis of these initiatives, the central bank projects sustained growth in the region of 2 to 3% for the Barbadian economy in 2015 and beyond. Thanks for viewing.